Morning, Ollie.
Morning, Andrew.
For those that don't know us, I'm Andrew Harrison, partner in the London Capital Markets and Development team. I've got alongside me Ollie Thornton, an associate in the same team. We've worked together for over 3 years now. We split our time between investment, core product, core plus, value add development, probably trending more towards the value add development side of the market. Um, and we are going to look at three areas today. We're going to look at the development pipeline, our historic data set, how we approached the development pipeline previously. And Ollie, I never thought that there would be a situation where we would do something like this with me wearing slippers and both of us sporting haircuts done by our other halves.
I know it's been remarkable, hasn't it? Who would have thought? Who would have thought back in December this would have ever happened? Crazy.
So development pipeline is crucially important, as we both know, both internally, but more so externally with our clients, especially in terms of their decision making. Historically, for years and years, ever since I started at Knight Frank in the London team, have kept a development pipeline data set. And it's been pretty impressive. There's a huge amount of data points in there. We have always looked at the number of schemes coming through over the next 5, 10, or even 15-year period. We've looked at what stage of construction or what stage of the development process they are at. So, for example, is it a site, existing building? Is it pre-planning? Does it have planning? Is it under construction? We've looked, obviously, tracked the development sizes and how much is pre-let, how much is available, the grade of that potential space, whether it's new, refurbished within the planning system or refurbished outside of the planning system, and earliest possible PC dates, we call it, rather than just putting a PC date, we try and give an estimate on what the earliest date that could be. And then historically, we've given a probability to that, which is our team, leasing, development, investment teams, collective view on what the probability of that scheme happening, be it unlikely, possible, likely, or definite.
Sounds like we've got a lot of our fingertips then, Andrew. In 2020, whilst we were working at home, lots being done behind the scenes to help us as a team.
Yeah, when March came, when COVID hit and lockdown one came, obviously the market quietened down substantially. But there was a huge amount that went on in terms of our data sets and research, and we went back to our development pipeline and said, look, we've got a real opportunity now to massively improve this data. And we went as a team, as a leasing, development, and investment team, went through. We've got now 400, I think the last count was 402 sites or buildings that we're tracking. And we've taken all of that data that we've collected historically and overlaid onto that now what we're calling a viability index. So every single site, be it something that is going to be delivered in the next 3 years or potentially delivered post the lease expiry in the next 5 to 10 years, has been given a score. And we have looked for every single site or building, we've looked at giving a score based on objective criteria in relation to planning, where it is in the planning system. We've given it a score in terms of the funding or financing arrangements that we think need to happen for that site to start or building to start construction, third party rights, easements, rights of light, more of a subjective view from us as a team on what has been boxed off and what risks still remain on the table prior to a start on site. And then a construction score in terms of in the process engaging with the construction market, tendering, where does it sit on that timeline, and how ready from a construction and design point of view is that scheme to go. And that gives all of those buildings and sites that we've got a score. And then that allows us through some pretty powerful graphical tools in terms of Power BI that we can use now, Microsoft Power BI. We can sit there with clients and take that data set and start presenting how the market, how the landscape, development pipeline landscape looks over a set period for that client. And we can then say, okay, well, how bullish or bearish do you want to be, or should we be, on how that landscape looks? So, for example, we can look at everything that could be delivered over the next 5 years, but then let's overlay that with our scoring, our viability index, to say, okay, what is the actual viable, realistic pipeline? Let's look at just schemes that have, say, a score of 7 and above out of 10, and that starts to dive deeper into what is actually realistically deliverable. And I think once you get into that level of granular detail, you start to see that actually the development landscape, the supply landscape over the short term is constrained. And especially in certain sub-markets, that we feel is going to lead to that imbalance of demand and supply as we come out of this short-term impact that COVID is having on the market, and we'll start to see rental growth to differing extents in those submarkets.